Express on Smooth 98.1. Omas and Zibby here. And let me let you know what we're talking about this morning. The IMF says US dollar bonds could pressure the Naira. That's what we're talking about this morning on Business Express. We have a guest joining us, but to be a part of the conversation, the WhatsApp number is 0809 440 You can also tweet at Smooth981. We're also streaming live, so you can catch the live stream up on our YouTube channel. Our guest this morning is Nathaniel Disu. He's a research analyst, Afrinvest Consulting Limited. Good morning, Nathaniel, and welcome to Business Express.
Hello, good morning. It's good to be back again.
Indeed.
Yeah.
To get us started, Disu, let's begin with this issue. So the IMF says that the dollar bond planned by the Nigerian government. The domestic bond plan by the Nigerian government is what the IMF is talking about. Says it could put pressure on the Naira. How could this happen?
Okay, yes, we saw the report from the IMF that planned the planned domestic foreign bond by the Nigerian government could put much pressure on the Naira. So let's start with bonds generally. So bonds is just more like a loan to the government. So when you buy into a government bond, more like you are borrowing money to the government and you get your interest. So it's one of the, let's say, safest fixed income assets anyone can invest in. So the IMF's position is that by Nigeria issuing a dollar bond for Nigeria, because according to the federal government, the dollar bond is to attract both Nigerians at home and also those abroad, those in diaspora. So the IMF's position is that by issuing dollar bonds for Nigerians, it will put much pressure on the Naira, because with that, there's that tendency for Nigerians to sell their Naira to buy dollars so as to take advantage of that opportunity. Because when you're investing in dollars and you're getting your returns in dollars, by the time you convert it back to Naira, it's kind of increases a bit. So what the IMF's position is that if Nigeria takes this route, it would put much pressure on the Naira. And we've seen how the foreign exchange has been volatile in the last couple of months. Even as at last month, it was hovering around 1,000, 1,001. So earlier around March, it was about 1,615 thereabouts. Later, from the CBN Forex interventions, we saw that Naira dropped down to about 1,000, 1,001. As of today, it's now back to about 1,005. So the IMF's position is that going through this route would put much pressure on the Naira. People would want to sell their Naira to get dollars. Those that have dollars already would want to invest in this bond. So that's the IMF's position on this this dollar bond that Nigeria wants to issue.
But at some point, it would seem like the Central Bank of Nigeria, led by Yemi Cardoso, had the firm grip on the situation and was taking us away from that volatile situation. Have they taken their feet off the pedal right now? And why are we having this situation now?
Okay, yeah, thank you very much. So what we saw in the last couple of weeks, it's more of a short-term intervention by the CBN. So to have a stable and a strong currency, a stable Naira, you need both the fiscal policy and the monetary policy to align together. So what we've been seeing in the past couple of weeks is the monetary policy getting to work. So it's just more like a short-term intervention. So that could not be done over a long period of time. That was not sustainable. So that's why we've been seeing the Naira the Naira pullback in the last couple of days. Yeah.
All right. So the government is saying that it wants to use the bond to entice billions of dollars in dumb accounts within Nigeria. By any chance, can you see the angle that the government is coming from with regards to this?
Yes. So like we all know, in Nigeria gets our forex from three major sources. We get it from our crude oil sales, we get it from FPI, and also we get it from remittances. So what the federal government is trying to do is to entice Nigerians abroad and those in Nigeria to get access to their dollar bonds. But the challenge is that we could recall earlier this year, the CBN issued Omo auction and also T-based auction. And according to the Apex Bank, a large number of those funds came from foreign investors. About 75% of them came from foreign investors. So they are bringing in their dollars to invest in Nigerian bond securities. And also, by the time they are getting their returns, they will not be paid in Naira. It's in dollars. So now doing this again for the domestic dollar bond is still foreign currency transaction. And with that, they'll be paid back in dollars. And from the recent auction that we've seen, the federal government has used about 4.8 trillion naira of that amount to sort out their ways and means deficits to the government. So it's more like they are borrowing to sort out a borrowing. So with that, they would borrow again to offset another borrowing. So it's more like an unending cycle, because by the time, if this dollar bond is being issued and is being successful, those returns will be used to offset a particular debt. They will not need to reissue another bond so it's more like an unending cycle. So that's what we are seeing the government trying to do, is to entice but the little challenge now is that there's still that issue in terms of confidence between Nigerians and the government. It's an unending battle. That how confident are we that the government is going to do the right thing? Just a couple of days ago, there was an outcry on social media about the cyber security levy. Everybody's complaining that why is it now? Why is it now? Why is it now? Just a couple of weeks ago, we had to battle with the fuel subsidy. I say subsidy, the scarcity that happened. Price of fuel was about 800, even to 1,000 in some regions. So there's still that air of doubt between Nigerians and the government.
You know, when you listening to you, you talked about how people have to be incurring the debt to pay another debt. So that reminds me of what you call long division back in the days. 2 divide by 3. It's just going to go on until you are tired. That's what will happen.
Yeah.
So let's get on to the other issue related where the government. Do you see the diaspora people willing to buy into this this bonds planned by the Nigerian government?
So for the diaspora community, even as a matter of fact, the tax chairman, that is Taiwo Oyedele, earlier this year or thereabouts, he said that about 75% of remittances abroad do not get to Nigeria. So when those abroad are trying to invest in Naira, they already earn in FX. So they have no dealings with Naira, so to say. So they are earning in dollars, earning in euros and pounds. So it's quite convenient and quite easy for them to invest in the bonds. So they don't need to buy dollars. They don't need to exchange their currency. That's what they are earning already. So it's quite easy. But for those at home, they would need to sell their Naira to buy dollars. And with the instability in the forex prices today, dollar is now 1.5, tomorrow yet is 4.7, next month yet is 1.6. So that instability would put more pressure on the Naira if Nigerians are to invest in that dollar bonds.
We're speaking with Nathaniel Disu. Nathanael is from Afrinvest. He's a research analyst. And we're talking about, well, the pressure on the Naira, or possible pressure on the Naira. And let's talk about the banks in Nigeria, Nathaniel. Now, some of the banks are offering US dollar investments. Do you think the federal government can compete with what they're offering?
Okay, in terms of banks dollar investments, so like I started this discussion just giving a brief definition of what bonds is, and looking at because every investment has a level of risk. So there are some that are more secured than the other, and fixed income are more secure than equities. Now, in the fixed income and the bonds, those issued by the government is way more secured than those issued by corporate entities, because in a way, government cannot fail. So no matter how government keep on borrowing, it's still existing. They cannot fail. So not like the corporates can fail, but the government bonds is way more secured than the corporate. But when talking about if the federal government can compete with the corporates, so for example, for the banks, just think last couple of days or so, we've seen the earnings results that has come out from the banks. So the banks are making a whole lot of money, and we can see their financials, we can see what they are making. But Nigeria in the large context, there's need for you to service our debts and all those things. So when the corporates are issuing dollar investments, especially banks, there's that tendency for people to kind of trust them more, if I'm to use that language, because directly they are not necessarily servicing much of their debts with those investments. But with Nigeria, we know that, okay, yes, these, and for the corporates, the returns tend to be a little bit higher than that of the government bond, because government bonds is safer. So the safer the investment, the lower the return. So there's that tendency for people to tilt towards corporate bonds over government bonds.
Well, let's remind you that you can be part of the conversation if you send in your thoughts relating to the matter, as we have Disu still speaking with us, and the IMF saying a domestic dollar bond could pressure Nigeria's Naira. That's what this gets your message across on 0809 444 0981. So let's return to the price of the Naira to a dollar as we speak right now. So approaching 1.5 to a US dollar at that level after closing 1,470 Naira to the US dollar in the parallel market on Friday. Take us into this week. What do you expect, and what is behind this movement in the price?
Okay, so what's behind this movement in the past is that, like I just said earlier, since when the CBN raised rates in February, March, when they raised the MPR rate from 18.75% to about 24.75%, we've been seeing we've seen influx of auctions from OMO auctions, bonds, and T-bills. And also in the last couple of weeks, I think in April, we saw the CBN issuing circulars of selling FX to BDCs. And that was a move that kind of helped the exchange rates during that period. But now in a way, those circulars are stopped. So as the circulars are stopped, the exchange rate has kind of
issue must send in more circulars.
So they send in more circulars, because in those circulars we could see that there was a fixed price. There was a fixed price at which they can sell those dollars. There was a fixed price, so that kind of got in more inflow of FX into the market, and it's kind of made the Naira a bit stable. But now those circulars have kind of been paused. Well, I'll not say stalled, because they can still issue it again. It has been paused, and now dollars is at about 1.5. So the long-term solution to this is still for Nigeria to focus on our major strengths. And what's our major strength? Crude oil sales. That's where we get majority of our FX. So if they can wrap up production, it would have a positive effect on our FX. In January, production of crude oil was about 1.4 million barrels per day. As at April, it has dropped to about 1.28. So we can see that there's a decline in production. And also, let's not forget that in the federal government's budgets for this year, crude oil production was benchmarked at about 1.7. So we are still way short of that target. And yes, and the fiscal deficit and the budget deficit is about 9-point-something trillion now. So what we are producing now is not even meeting up to the target of what the federal government wants to achieve, and that would kind of have a further strain on the Naira.
Well, that's about how we can wrap it up this morning. We want to say thank you so much to you, Nathaniel Disu, research analyst, Afrinvest Consulting Limited, for your time. Wishing you all the very best for Monday and the rest of the week. And I want to say great tie also you've got there.
Thank you very much. Enjoy your week also.